Asian markets remain on the back foot this time around. It seems that geopolitical issues are at play on concerns around the nuclear arms race in the region. All the markets that we look at were down on the day. Over in Japan, the Nikkei share average declined by 0.62%. Hong Kong shares got battered again, with the Hang Seng Index down 1.46%, with mainland China also experiencing weakened sentiment. The Shanghai Composite Index ending 1.34% in the red. Over in the United States, U.S. stocks ended higher on Wednesday as surging crude prices boosted energy shares, and a swathe of positive U.S. data suggested inflation has crested and the economic recovery remains robust. The Dow Jones Industrial Average rose by 0.71%. The S&P 500 gained 0.86%, while the tech-heavy Nasdaq Composite Index added 10.84%. All right, to discuss the market, well, we're going to take a quick look at the indicators. All right, to take us through the markets, I'm joined by Nesan Nair. He's a portfolio manager at Sasfin. Thanks very much for joining us, Nesan. Now, what do you understand to be the factors causing a dent in sentiment in the Asian markets?
Yeah, good afternoon, Nampu. I think you mentioned one of them, this geopolitical tension that seems to, have reached a little bit of a higher temperature in the last few weeks. Specifically around the sort of North-South Korea, Japan, so that Korean peninsula. I think they're exchanging missile fire. It's shocking to even contemplate what that's going to be like in the next 2 to 3 weeks. But of course, also we've had some poor data come out of China. I mean, China retail sales for August was only 2.5% compared to July, which was over 8%. And, we're seeing slower export numbers out of Japan. We're seeing slower industrial production numbers coming out of China as well. So I think the high frequency data is just off the gas a little bit, which is affecting maybe sentiment in that area.
Still with Asia, what's the story with Tencent? I mean, I see that was down about 1.6% in the Asian session. And what does this mean for Naspers and process investors?
Yeah, so Tencent's been, obviously under the fire together with a lot of the Chinese, the big Chinese tech stocks recently. Government cracking down on, trying to crack down rather on the massive influence that they have through their platform. Of course, recently as well, Chinese authorities rumored to start cracking down now on gaming in Macau. That sent some of those gaming stocks there down 7-8% in the last few trading sessions. And I think the concern from investors is that the Chinese government, maybe going or coming through a phase of intense regulation of a lot of these vices, or what they perceive as being vices, in an attempt to try and slow down, people from engaging in these kinds of activities.
So on the local market, apart from, those big ones, Naspers and Process, what other developments have been taking place that are of interest to you?
Yeah, so, I mean, we've had, obviously, FirstRand's results coming out. Today we can chat about that. But, I think for me, the last 2 months has been more about the local stocks. The stocks that were so heavily sold off and seem to be recovering right now. I mean, property companies have, basically all of them have started resuming dividends. It's still below the sort of COVID-19, so still pre-pandemic levels, if I can call it that. But I think the indication and the direction, and the confidence that comes with resuming dividends is something that investors are beginning to enjoy. You're seeing those stocks pick up as well. Of course, Naspers and Process, as you indicated, still under a lot of pressure. They'll always follow what Tencent is doing. And right now, with Tencent being under so much of regulatory pressure, I think those big counters of the JSE are still going to come under some strain in the short term.
So even though you work for them, I'm sure you can put your objective hat on and just give us a quick view on the FirstRand results. Of course, FirstRand houses FNB, Westbank and many other companies. They reported earnings up 54%, normalized earnings compared to last year. And of course, the backdrop to that was the COVID-19 restrictions. Your thoughts?
Yeah, so I thought, a reasonably good set of results, very much anticipated. We've had all the other banks report half-yearly results. FirstRand's a June year-end company, so their results tend to lead the others a little bit. You can almost read what's happening in the economy, through the FirstRand results and get a better understanding of, where things are going at the moment. For me, it was an impressive set of results, largely because they managed to grow the top line in an environment when interest rates had actually come down. So I think that goes to show, that they had a very good sort of management of their asset liability book. They didn't spend too much of time in the results talking about that. Highlight for me, though, they have stopped funding coal-fired power stations. And I think following in Nedbank's footsteps, of course, and the reason it's a highlight, it's got less to do with FirstRand, probably more to do with government policy. We know the government policy right now is to have a mix of energy generation. Coal is one of them, but I wonder how that policy is going to change when nobody's prepared to fund it anymore.
And then very quickly, before the Reserve Bank gives its ruling on interest rates next week, what can we expect and what's behind your rationale there?
Yeah, so I think rates are going to stay flat. I don't think we're going to see any changes anytime soon. Potentially for the rest of the year, we still have an economy that needs to recover. And while, inflation has picked up, compared to last year, of course, it's of a low base last year, I think the Reserve Bank has given every indication that they're going to caution when they start raising rates again. So I anticipate that we'll see flat rates for a little bit longer than what a lot of people anticipated at the time that the rates were cut.
Super. Nesan, thank you very much for your time, sir. That was Nesan Nair. He's from Sasfin. The labour force with